Welcome back to Bitcoin Advisor Channel. My name is Chris, bringing it to you from a lovely little Westlake Village, California, and it is a beautiful day out there. Hope you're enjoying your Friday. Now let's take a look at Bitcoin. I'm going to make this one short and sweet for you guys. It's coming into Labor Day weekend, and what usually happens, you get some sideways chop over the weekend. So I will be doing a deep dive on the charts over the weekend, but more or less, we're going to come into the monthly close here. Is the monthly closed for CMEs? Interesting. Did the week close? Well, that's a very important weekly closure, so I'm glad I'm bringing my attention here. And price is squeezing to the downside right now, guys. Short term, I am looking for this wick to get filled or at least tested the middle. Could I be wrong? Is this financial advice? Am I a financial advisor? No, but this is what the chart is giving me right now, so I'm just going to give it to you guys short and sweet. 51.445 on CMEs, which would translate to a little bit different price on the spot price. So let's just check that really quick here. And there's a potential short trade setup with the TP1, 2, and, well, 3 right there. 3. But the easier way to do it and the more conservative way is to target the middle of the wick, if you ask me, and that's coming in at 51,379. Does that line up with anything? No, it does not. It lines up right with the middle of this candle, high volume node right here. So that's in general what I'm looking at in the short term. So more patience, more sitting on our hands, more waiting. It's been 6 months of waiting. You can wait a little bit longer to get the explosion to the upside and potentially getting in some of those buys to the downside. There's your 1618 fib, good old Fibonacci retracement number from the high to the low, 47,778. So that is something to consider as well as a potential second target after you hit the middle of this wick. And why do I think that? Well, starting out with the 4-hour time frame, you can see this volatility is now very low, and momentum has crossed to the downside. Actually, we'll cross down again below 58,612. Where is that? $58,612 is the number for the 4-hour momentum to flip back to the downside. I'm going to mark this off on my what did I say? 58611. Here it comes. Boom. Close enough is enough. So basically, we're just looking for a rejection off of this. And as volatility expands, well, momentum was to the downside. And we're starting to see that jewel, flip back around here. Could be a positive note, but this is a bearish candle. This is a bearish candle. This is a bearish candle. And price typically moves in those 4 waves. And what do we have here? Well, wave 1 breaks the 200, right? Where does wave 2 take you? Typically to the 1618 fib, which is going to be coming into this wick here at about $55,000. Probably going to be some bounces along the way, and not to have a bearish price. This just means buying opportunity heavens. Buying opportunity heavens if it does go down there. And as volatility expands, right, the average move, you can see the expansion on a 4-hour time frame is not going to be that big. That was 8%. I think the typical move is probably around 4%. Let me get rid of these drawings here. So 4% from the signal given. Probably already got it. 3.38. Maybe the signal played out. And all I know is I can see this big ball of liquidity right here, these high volume candles. By the way, if you want to get this indicator, it's called the PRVSRA. You can go to your indicators tab right here and just type it in there, PRV. I always get the acronym messed up here. No, it's PVSRA. There it is. 631 likes from Mr. Green Crack, whatever that is. I imagine he might be in for, anyways. Long, short, temporary downside action potentially in there. Also, you have the 1-hour range, which is just continuing to make those lower highs and lower lows, right? We got lower high, lower low, lower high, lower low. and potentially just another lower high. If we come up to this green 55, grab that liquidity one more time, and then that would be probably your signal, and you got more bearish divergence. As long as we're below this high, you're going to make bearish divergence on every high, sending you back to the bottom side of the range, which 4-hour momentum will flip back below 58.253, 58.253, 58.253. So pretty much back, below the middle of this guy. Momentum will flip back to the downside. You got declining volatility coming up against that. So, probably going to dance it around here. Probably comes up into these wicks, grab that liquidity, and then at least one more throw down to the downside. Other than that, probably going to bounce sooner than later, right? Probably going to bounce at some point here pretty good. We bounce from this level at 57.5 or this level here at 53 or 54,000. Short-term bounce incoming, but this kind of posturing, coiled up volatility and momentum, moving averages all curled to the downside. Pretty much as long as we're below this last high at 61,233, pressure is going to be on the downside. That said, I've got to make it a short one. So coming in to next week, hopefully we're going to be looking at something like this. And I'll be sure to give the levels that I'm looking at next week. Make sure you smash the like button and hit your subscribe. And yeah, the major area you typically want to long off, right, on a macro trend. Let's take it out. When in doubt, pull it out, right? That's a horrible saying. Is that the 382 again? Yeah, we're looking to rinse and right there. Bang, bang. All right, we'll go over that next week, guys. Have yourself a blessed and highly favored one, and I will see you later.